In this video, we're counting down the top 5 reasons to file Chapter 13 bankruptcy. So stay tuned, bankruptcy bailout buddies. So welcome, debtors and borrowers, to Bankruptcy Bailout, because debt ruins lives, not bankruptcy. My name is Matt Burkus, Colorado bankruptcy and debt relief attorney, and today we're counting down the top 5 reasons to file Chapter 13 bankruptcy. So first, let's give the short version on what is Chapter 13. Chapter 13 bankruptcy is a monthly payment plan. So you propose a plan to pay back a portion of your debt over 36 to 60 months. That's in contrast to a Chapter 7 bankruptcy where you file bankruptcy, wipe out all your debt, you don't pay anything back in a Chapter 7. So the question, of course, is, well, why would you do Chapter 13 bankruptcy? Well, here's the top 5 reasons you would have to do or might choose to do Chapter 13 bankruptcy. So, number 5, you have certain debts that can't be taken care of in Chapter 7 bankruptcy. The big ones here tend to be recent back tax debt or back child support. Chapter 7 isn't going to eliminate those debts, but Chapter 13 allows you to force those creditors into a monthly payment plan that you can afford if they're not going to accommodate you. So if you have a broad basket of debts that include things like credit card debt, back taxes, business loans, back child support, Chapter 13 can often make more sense because you're going to pay back those debts that you have to repay anyway because they're not going to get eliminated in Chapter 7. So that would be the number 5 reason you would file Chapter 13. The number 4 reason, it's a big one, is you have too much equity in assets. In other words, if you file Chapter 7 bankruptcy, you're going to lose some of the things you own. Maybe your house, maybe you have a lot of cash in savings or an investment account, or you have a business. That's a big one. If you own a business, generally speaking, Chapter 7 is not a good option for you. You will want to file Chapter 13 bankruptcy because in Chapter 13, your assets don't get liquidated. They don't get sold like they would in a Chapter 7. So if you have assets that can't be protected with exemptions or other mechanisms to protect them in Chapter 7 bankruptcy, you will file Chapter 13 bankruptcy and use a monthly payment plan to pay back a portion of your debt and protect those assets and allow you to keep them. All right. Number 3, this is a common one, is you have a prior bankruptcy that's too recent. Right? The time frame between filing 2 Chapter 7 bankruptcies is 8 years. Well, a lot can happen in that time frame. So if you have a prior Chapter 7 bankruptcy, for example, that is maybe only 3, 4, 5 years old, well, you're not eligible to file another Chapter 7 bankruptcy. So if you need a bankruptcy for some reason, maybe you got sick, there's medical issues, or additional credit card debt came up due to emergencies or the pandemic or whatever, then your option would be to file a Chapter 13 bankruptcy, propose a minimal payment plan to deal with your debts and get you the protection that bankruptcy gives you. All right, so prior bankruptcy, too recent, that's the number 3 reason. The number 2 reason, and again, this is probably the big one, is you just make too much money. All right, in order to file Chapter 7 bankruptcy, you have to earn, or your income has to be below a certain threshold. So if you earn too much money and you don't really have enough in the way of allowable offsetting expenses, well, then you're going to be in Chapter 13 anyway. Again, paying a monthly payment to pay back a portion of your debt. Nice thing about Chapter 13 is you're not required to pay back all your debt necessarily. You pay back a portion of it, and the balance that doesn't get paid, all right, gets discharged. Okay, but if you make too much money, you're simply not eligible to file Chapter 7. So your bankruptcy option is a Chapter 13. And the number 1 reason people file Chapter 13 bankruptcies is to keep their house and get it out of foreclosure. All right? Chapter 7 bankruptcy provides no option, no solution for dealing with a foreclosure. However, Chapter 13 bankruptcy allows you to force the mortgage company into a monthly payment plan to pay back your missed mortgage payments or the mortgage arrears. So, if you have $20,000 in mortgage arrears and the bank isn't willing or able to do any sort of modification, or whatever modification they're proposing you can't do, you can file Chapter 13 bankruptcy and pay those mortgage arrears over the 60 months of the Chapter 13. And then, of course, you deal with all the other debts that you may already have as well. So the number one reason to file Chapter 13 bankruptcy is to stop a foreclosure and stay in your house. I hope this information has been helpful to you. My name is Matt Burkus. I practice bankruptcy, student loan work, and back tax work in Colorado. I offer free initial phone consultations to the residents of Colorado for the purposes of bankruptcy. Best of luck to you, and we look forward to working with you.